Welcome. Welcome to USM's free investor crash course. Get your notes ready, and since this is recorded, you will be able to rewind it. That is why I didn't go live. I want you to be able to keep this knowledge and reference it anytime you need to. I'm here for you, the new to the old investor or trader in the making. This video/audio movie is just for you. We will start with what you need to know, the very basics of what you need to get into this game, and I broke it down into 6 simple things. Number 1, stocks and shares are what you're buying. Number 2, positions equal the companies you're buying into. Number 3, bull market equals green, which equals going up or expected to. 4, bear market equals red and equals going down or expected to. Number 5, buy. Number 6 is sell. This is all retail investors need. What amount should you start with? $1,000 at least for investing and $500 minimum at least for trading. And there is a difference between the both. Of course, you can start with less, but know that the growth rate will be the same percentages, just smaller in dollar amounts while it is growing. So for this example, we will break down the $500 investment. As I know most of the retail traders don't come from money, and that's fine. You're a working class, so it is a safe amount to start with and feel the market out with. So 500 as your startup with a 20% gain per month. That's your goal simplified. Number 1, put 500 into the market after choosing a research stock to trade with. Remember, trading is different from investing. With trading, you're non-committal, only staying for what you want and nothing else. Where do you find these research stocks? Hopefully you use the stock wave for that. Number 2, after you bought the stock, now what? Sell it, of course. But when? The when to sell should be decided the same time as when you buy. You should have your entry and exit plans already set in your mind. But for this example, remember I am showing you how to lock into and grow your trades accounts by realistic 20% a month. So with our $500 starter example, the 20% gain breaks down to $25 a week. So all you need to do is gain $25 per week to be on track. To keep it simple, the $25 gained weekly in a 4-week month equals $100 profit. I shaved off the extra money earned by reinvesting each time just to show you how by doing this simple step you gain 20% in the month. Now if you're saying that ain't no amount of money, go to your nearest bank and wait it out. But if you are one of those who sees the profits, continue with us. First month, done. You made $25 profit per week and $100 profit for that month. Now you do it again, but the 600 at a 20% profit goal will equal 120 this month. The new goal is $30 a week. Remember, we are lowballing to show the value, so I'm still shaving off those extra dollars made weekly via reinvesting, which will naturally increase the percentages a little bit. Rinse and repeat, which means to do the process over and over. The same percentages as when you started. Why overcomplicate it? Why get caught up in a chase? Why stress? By the 3rd month, you'll be at 720. Your goal is still 20% for that month. So your weekly goal is now $36, which is your 20% goal divided by 4 weeks. At the end of the month, your 720 plus 144 will equal $864 total. Rinse and repeat the process once again. Same percentages as when you started. Why overcomplicate it and why get caught up in a chase? Why stress? On your 4th month, your $864 is going to create a 20% of $172 profit. To get to that weekly, your goal is only $43 a week. At the end of the month, you will hit some major milestones, which will cross the $1,000 threshold and your account would have doubled. Now that you got over the $1,000 threshold, this process really starts to move. 20% of $1,000 is $200 per month, or $50 a week. to get to your 20% a month goal. Your next 4 months, you will be at 2,000. 4 months after that, you'll be at 4,000. And 4 months after that, you'll be at 8,000, doing the same low, slow, and grow process of 20% gains on solid mid-price stocks. Now, what are mid-price stocks? They equal stocks that maximize your ability to get to your goals or your gains without risking the investment. Lowest cost is not the best way of picking these. Yes, you can lower costs, but don't let cheap prices be the decision or deciding factor. I personally like $10 to $20 range. It seems to work well for my plans and goals and keeps me very liquid, which is important as you grow as a trader. Your 500 divided by 20 shares equals 25 shares. Boom, your first goal. Now you have 3-day trades in that 5-day cycle to make that $25 profit, which is your weekly 5%. And that weekly 5% turns into your monthly 20% target. How does that goal get hit? Many ways. You could put all the money in one company, buy low after you looked over the intel, and wait for it to grow. The second way is to get to your trader goal is actually day trades. Buy and sell into and out of position a few times per week. By one, the position you lock into goes up 50 cents per share, but you feel or think that it is done. And since you're not holding long and not greedy, or picking greed over your due diligence, then you sell for profit. Now you are halfway towards your goal. Third way is to split the initial investment into two positions. Whichever one goes up 50 cents, first sell off, retain profit. Now you look for another while your second pick cooks and gets ready to simmer to the top. You can either re-enter into each position if they are dependable like that. Join Stockwave Network to find out what a real repeat hitters looks like. Since we coined that phrase, repeat hitters, and are the only program that has a section dedicated to that. The fourth way, which I don't like when you're first starting off, but still an option, is find 3 positions, divide your initial investment into all 3 positions evenly, and then literally play hot hand, which is the 2 that are up, sell for profit. The third, hold and wait for it to go up while you're finding your next 2 positions or re-entries to buy low again and go up again. The most important parts of trading and being a trader is study your brokerage app. Download, press buttons on days off, and test it and read it. Stick to your well-written or mental plan. Keep the scope, weekly tasks, monthly tasks, etc. realistic and focused. Don't try to do too much, learn too much, and crowd your head with overcomplicating the process at the start. You can always pick things up as you go. Be real to yourself. Not all of you wanted to be traders and investors for a living. And if that is true, then use it for what you're using it for. No need to overload. This truly can be active but passive at the same time if you look at it for what it is for, your individual goals. You want trades for money, you use it to build your savings money. Hopefully you guys are getting it. If not, you can always rewind and check it out later. Now, the investors. What you need to realize as an investor, investing is a slower process. You can't rush investing. You shouldn't rush investing and should be able to commit more revenue to allocate into your investing accounts, either in one lump sum or weekly or whenever you get to decide to set up regular deposit plans. Investing takes more upfront money. I want everybody to realize that. It doesn't take millions or hundreds of thousands, but it does take more. Whatever amount you choose to start with locks you into a growth pace. What that means is if you start off with 1,000 and you used the $20 per share method, now you have 50 shares working for you. Remember, from my training example, the cheaper shares are not necessarily the best for everyone. 50 shares equals 50 moving parts, which equals 50 growing seeds. The more moving parts you have, the better for you. That is why in some ways it is better to drop your whole investment amount at one low price and lock in and let it ride for your full time. So if you can and you want to invest long term truly, then this is a solid dedicated way to get the ball rolling. Invest 3, 5, 10K in a well-researched company. Different ways to long-term invest as an investor is straight shares, stocks, ETFs, or dividend stocks. Straight shares require good D&D, which is due diligence, research, and intel. But buy as low as possible, but don't miss the chance on a good price. Let it grow if you want to add to that position every week, etc., and wait for slight pullbacks. This process is called dollar cost averaging, drip investing, partial investing, etc. Some apps and brokerages offer it automatically to deposit money weekly, etc., but don't opt into this as they will not give you the best averages. The best way to do it is transfer your money weekly and do it yourself. Now, the trick with investing in ETFs is ETFs offer dividends. Dividends are little percentages of revenue paid out to loyal investors who stay holding shares through certain benchmarks every 3 to 4 months. You receive a small percentage just for holding the position. The extra is good, especially on growing ETF funds because they double your income. ETF exchange traded funds. The easiest way for all to understand what they are is buying in bulk. Funds are created to offer access to multiple companies in a sector or like sector, similar space of business. This is a way to benefit when the whole sector is heating up. Also, you're rewarded by dividend payments along the way that you can reinvest. Options trading, not needed as your first, and it should not be presented as a first trading option to anyone who has never traded stocks and shares first. This is a cautionary yet again for me. But many dive into it not knowing what to expect, accept, and being blinded by what they should expect with the possible gains. So they don't look at the real pitfalls. The pitfalls are due to the lack of discipline, training, and also respect for what you got yourself into. You must research first all and determine what direction you want to go with your contracts. Up equals calls and down equals puts. Once you decide, then you must decide contract size. If you're new, always start with one. Then you must determine pertinent strike prices. It says stoke price. It's supposed to say strike price. You get it. Strike price is the price your contract has to hit on the expiration date for your strike price to strike even, which means that you can buy those shares at the locked-in price point if you so choose. Many people think that strike price is the only about profit. It is not. It is your ground zero on your contracts. So if you're not near it on expiration or whatever you're down, you lose. Losing contracts can be sold off at a loss. So if you're down $1 or thousands, you can always sell to keep the remainder. But this offers no way of getting that lost money back at all. The more complex ways of trading options, you can set other contracts into place to literally make sure you always get at least one favorable outcome. But that is capital intensive. Winning or contracts with 10 to 20% gains should be good or sold off, especially when they are in the week of expiration before Wednesday closes. Unless you have a major catalyst that will push that price up during the last 2 days, you should not risk the profit made for the profit wished for. Time decay, see Options Course 101 in advance for that. Passive day traders, what you need: money and a reliable source for direction, a little bit of reading, and a few minutes a day to execute a trade. Have your predetermined game plan as explained in the beginning of this video, and you're well on your way. Semi/full-time traders and investors, capital, the drive to stick with it, research habits, and of course time. Tips: stop losses, find out what they are and how to use them. Set limits, find out what they are and how to use them. Trading in extended hours, know what you have access to. Day trading limits, keep track of them. More money does not mean buy more companies. Small money can get you going. Shares over contracts to start, think 50 cents per share first. I am doing this to help build a community that will spread out and build the community. My reason for creating this network is not fame, but true change by providing real game in a clear, concise manner for all to understand. This was and is and continues to be my passion project of mine to help you with what I know to start making you thousands and work yourself up. Trader's plan. Have a plan and stick to it. How much to start off with? 1,000 or the minimal one I recommended is 500. Remember that. You can start with 1,000 or if you're investing or the minimal is 500. And hopefully this has helped you guys become better traders, understanding the difference between trading and investing and what urban stock market can offer you, and just a free quick put together course while I'm on the road going to from one destination to the next, checking on Goshen properties and other things. I decided to make this video to show you how simple and how you can simplify the process of just trading and investing if you think smaller to get to the bigger goal. So I look forward to see you guys become official stock waivers, and everybody else, I will see you on the boards.